Okay, so let's start again. So I will be sharing my screen, and I will be showing you my terminal, which I have set up like as a demo account. Just confirm me if you can see my screen. I mean, like my Mozilla Firefox.
Yes.
Perfect. Cool. Great. Great. So what? So you see, like this is the futures trading platform of Binance. And what's the difference? Just a minute, I'm arranging my Zoom screen properly. Okay. Okay. So here are the contracts. And like sometime back, I spoke to you about the contracts, which is based on USDT pairing, right? The growing of your USDTs, which is USDT accumulation strategy. And if you want that, you will click here, right? This is what like normally we are trading right now. It's the USDT accumulation strategy, and all the trades that I share with you and everything, it's based on this USDT accumulation. And here is another one, like, which is coin. You see, like these are different because here you have, I put 100 USDT here, like just to show you the demo today, like we'll be making a real trade. And if you see here coin futures, you see like it's asking in terms of BTC. It's not asking in terms of USDT. So you need to have BTC here to grow your BTC. And USDT M futures, it's asking USDT. And if you want like something else, like of course you can you can borrow by like you can take for example like 0.05 bitcoins, like you can put it here and you can borrow USDT. It's like you're taking a loan from your BTC to USDT for trading purposes. So now you understand the difference between USDT M futures and coin M futures. So go here, like for USDT thing. And how to select, you can go here and there'll be a drop down. Click here and try to select like whatever you want. Like you can go for like BTC. This will come, and always have a look at this one, BTC USDT. That is very important. BTC USDT perpetual. Perpetual contracts are those contracts which doesn't have any expiry date. There is no concept of expiry date here. You can keep it open forever. And when it comes to like other kind of quarterly things, you see like it's written 0625, which means like it's expiring in the month of like June. Yeah, it's 06 is June and 25. June 25, this contract is going to get expired. Then you need to shift to another contract. So that's what it means. But when it comes to perpetual contracts, there is absolutely no expiry. This is the difference, major difference between this quarterly and this kind of like perpetual contracts. So here, like it's USDT, and here also it's USDT, but observe here it's USD, not USDT. So there is different contracts here, even in the quarterly also. Again, the difference is very simple. In USDT, it's the tether, which is the collateral, and that is your accumulation strategy. In the USD means it is base currency is always like BTC, which means like you are having BTC accumulation strategy. Here, like let's take this USDT pair, and I have already put a star here. And when you put the star, it appears here on the top. And you see like I have ETH perpetual. I put the star here and it appears here. And in the same way, like I did it for LTC, XTZ, BNB. If you want to remove that one, go to XTZ, it comes, remove it. You see, it disappears from here. So right now, that is BNB. So how to buy and sell BNB now? So as you are seeing here, there is perpetual contract, BNB USDT, and there is two things here. Cross margin, isolated margin. What is the difference? The difference is Like if you take cross margin, for example, and I showed you how much money I have in the wallet now, $100. Let me say I'm taking position only for $20 worth of position. Now, my whole position will get liquidated only when my losses exceeds this 100 USDT, which means completely whatever money I have in my account is at risk. That is cross margin. Cross margin means like it uses all the money that is there in your wallet completely. And when it comes to like isolated margin, which means like if you have taken a trade for, let me say, 20 USDT, the maximum loss that can happen is only 20 USDT. It cannot be beyond that. But in between, if you feel that you are, you can add margin also. That is all possible. But always you need to know the major difference between these two things so that whole of the money will not be finished. I'll tell you what happened like with me. I think it was in November 2020 or October. I don't remember properly. But I was having cross leverage. It was very small amount, like I think 1 or 2,000 USDT or something. I was having XRP because it was at a very low price. And I was thinking maybe I can make some quick gains out of it. But I had the position like at the night, something around 9 o'clock, and morning I woke up and there was no XRP at all in my account, absolutely nothing. And I'm just trying to find my contract. And I was about to even contact Binance for that. Like, where is this one? But what happened was like XRP was like here somewhere. And there was a sudden wick of 30-40%. And it came back within like 1 or 2 seconds. It was just a small wick actually. But since my liquidation price was somewhere here and it fell down so much, it was liquidated. Means all the money was lost, whatever was there in my wallet. So it's advisable not to keep too much money in your margin wallet also. Keep only that much of money that you really are ready to lose in futures trading. But if you keep huge amount of money in your wallet while trading in futures, that's not wise. It's going to be very, very dangerous, especially in futures trading and especially when you are making cross leverage. So isolated leverage also has its own pros and cons. The pros are, of course, like you cannot lose more than your isolated funds, like which is invested in a particular contract. But very often in a very volatile market, like you can lose that money pretty easily. And always it hits the stop loss and goes to the target. Or maybe it will just come there and then it is all fine. So this is also one thing. Personally, what I feel, you should always have like a small leverage, possibly around when you start your trading career in futures trading, always start with 3x to 5x. That is really, really, really ideal. And if someone is thinking like 5x, really? Oh, then don't come for futures trading, please. Go and sleep. Because when you're coming to futures trading, of course, there is some risk. We all have to take risk, right? Without taking risk, we don't get anything. So we have to take some risk. But the risk should always be calculated risk. In the sense like we should know like how we will manage this risk in case if we lose this money. As we always say that we should not put money more than what we can, like what losses we can take. So having said that, what I'm saying is take 3x leverage to maximum 5x leverage. Don't go beyond 5. It is going to be very bad if you're not so much used to it, because you will be doing something and without knowing what you are doing most of the time in futures trading, and losses can happen, and that can make you, like go out of it or run out of it. So this is not the place to run out, but this is the place to like learn from your mistakes and keep going on. And that's how you do in trading. And there are some tricks actually in futures trading that you need to know. And that is more important for me to tell you than like telling about any other aspects of futures trading on Binance. The first thing that you need to know is like It doesn't matter how much profits you make. Profits are profits. You should always keep this in your mind. Profits are always profits, and it's not going to spoil you. But if you make loss, you lost it and you don't have it now. That is one basic thing what you need to have in mind. That is why it's always important that you minimize your risk, keeping in the mind that you will have gains and you are trading to gain, actually, not to lose. So this is what you need to keep. These two things are very, very important. And why I'm saying that? Because you need to learn futures trading first before going all in like a professional. If you have 1000 USDT, divide that by 10 parts. 10 parts. You need to divide that by 10 parts. And when you divide by 10 parts, it's like 100 USDT for every single trade. Watch out for a good coin, okay? Like to know what is a good coin and to analyze these things like will be a different thing, actually. I totally understand that. But sometimes like when I'm sharing the, like the coins with you, and I am myself buying the same thing also, but I am buying it in a different way than what normally people do. Normally everybody goes like 5,000 USDT, 6,000 USDT. Okay, one day they made 30% out of it and they are on the moon. But you know what? It's not really exciting to me because that was not the right strategy and you earned. That's cool. I'm all happy for that. But what if you lose that complete $5,000? Because we should not only see the way up, we should also see the risk way down. That is more important that we need to see. So for that reason, you need to buy in a very step-by-step way, in a ladder way. That's what I do because I know right now the market is pretty volatile. I don't personally think we will go beyond, $48,000 mark on Bitcoin. At the same time, on the top side, also, we don't have that kind of big news right now to go beyond $61,000, $62,000. It can always happen. Bitcoin surprises everybody and nobody knows what is tomorrow, right? We are not astrologers and even those people don't know these days. So nobody knows what's going to happen. But this is just like my prediction based on my experience. So 48 to 61. So when you know there is a range there, you need to be adjusting your risk reward based on these kind of conclusion. So what you need to do is imagine like right now, how much is BTC? Let's go to BTC. So BTC is like 54,561. So 10% of it is something like 49,000. Yeah, it's 49,000, 10% of it. So let me say like 12 to 13% is something like 48,000. So that's what I am telling here. So if it is like so much of difference, now I said like divide your money by 10 parts. So what you need to do, like you will go like with 3x leverage here, like just with 100 USDT and wait for like another, like 3%, 4% fall. And you buy for a little bit more afterwards. So in this way, you will average it. And when it is at 48,000, since you have average for every, like 1,500, so you have average, like, for example, 5,400 to 48,000. It's a $6,000 journey downside. That's what we are looking at. So in that case, for every 1,500, if you keep deploying 100 USDT, 100 USDT, 100 USDT, and 100 USDT, then you are somewhere around your average is like 51,000. Now imagine, even this is a kind of open secret that nobody really watches it or carefully or observes it carefully. The thing is like whenever it goes near some psychological mark, like 50,000 or some kind of support places, it always bounces. Last time it went to 50,400, it bounced back. Now it's 54,000. And whenever it goes to like on the top side, like 60,000, 61,000, there's a huge resistance because it's going to uncharted territory. Some people are booking profits. So it always falls down. And even here, like you can short actually. You can short with having very less leverage and keep the stop loss at the new all-time high, which is like 63,000. So $2,000 from 61 to 63 in terms of stop loss, like it's like 3% stop loss. So 3% into 3 times leverage, it's 9% stop loss. That's not so big like in futures trading. Absolutely not. So you can trade in this way. Also, you know, the bottom now, which is like 48, as I said, and on the top side, something about 60,000 and 58,500, 60,000. There is always a resistance point. Even if it crosses, we have seen like only 61,000 or maximum 63,000. We can just check like daily charts of Bitcoin. See like 61,950. This was the high point. And then again, few days later, there was again like this candle, which was trying to go past 61,500. And look at the high here. It's 60,500. If you watch here in this place, you will be seeing the prices also. Open, high, low, and close. Just keep seeing this one, how the prices change. So now we are at all-time high, and you can see the high there, H, which is 61,950. And you know what? There was a correction here. And second time it attempted after 2 days, which was like 60,740. And it failed. And there was another attempt above 60,000, which was 60,510, which was the highest here, which you can see at this place. Yes. So this was the high point. So again, what happened? It dropped. It dropped. It always drops. It always happens that way. And that's how you need to take advantage of the fact. Whenever something is going to the historically high, until it makes another new high, keep that as a stop loss and trade with that with minimum stop loss. And here you see what happens. On the downside, it came to this point, which I said is 50,400. Yeah, 452. 50,000. You see the low point here at this place exactly. It is 50,452. So 50,452. Why? Because 50,000 is a psychological mark. And you cannot exactly buy it at 50,000. It's not possible. So when it is getting like 1 or 1.5% plus or minus close to it, start buying at that point. So immediately, if someone would have bought like even at 5,600 or 50,600 or even 50,700, still very next day, they have like a big green dildo there, which is 55,123. So you get that. You can easily trade in this way. And BTC is less risky compared to other kind of contracts. Other kind of contracts will drive you crazy completely. And I don't even feel that many coins should be even in the futures trading. If it's in the equity side, like on NASDAQ or any kind of like Shanghai or any big exchanges, they will actually choose certain contracts to go into futures trading. They just don't allow all the kind of contracts to be on futures trading. But here in crypto, we always see that one happening. Now on FTX, even ESC, the SIA coin is on futures exchange. And they can buy it and keep seeing it for all their life. It moves so slow. But when it moves very fast. Anyway, so these are some of the places, like, you know, whenever you see, like even here also, it was the all-time high at that point of time, 58,472. So whenever there was a new high being made, you could have shorted it probably, and then it never made, and it dips and go to like 43,000. And this was exactly the time at that point of time when it was here, this candle around 55,000. It was me who said with confidence at that point of time that like, no, we are going to go down beyond 50,000. It was so sure at that point of time that it is going to come because the correction was due at that point of time. So even if, imagine like, even if at this place, when there was a breakdown below 50,000, right? It's below 50,000. Even if you'd have bought it at this place, like 50,000, next day it came and you see like the next day closing candle was at 54,260. So there was a bounce, of course, and then gradually it drifted down. That's a different story, but I'm just speaking about these two candles, and this is like 1 day chart. So it's 2 days things. So always there is an opportunity. And here, maximum it came to 43, and that's what we were expecting, like 43, 42, and probably it can go up because it will go into accumulation zone. And that's what exactly it happened. And there was like crossover of 7 day and 25-day moving averages, like which was happening here, which forms as a base now. You know, whenever it comes down to this price of 47,540, yeah, you can expect some bounce from those levels as well. 42,000 will be the worst, but beyond that, I don't think it's going to happen anytime soon like that. So this is how like you make some kind of like small analysis, but of course this is very basic analysis, that there is much more you need to do, but this will at least give you some basic picture for you to handle yourself. So now coming to the real trading part, let's trade BNB. Yeah, BNB, it's good. So I will take cross leverage because that's what I like. And 20 times, sometimes I take 15 myself maximum. And when I'm extremely bullish on something, like it can be 50 times also, sometimes it's extremely rare, but I do it. Actually, I don't know, sometimes I'm bullish or foolish when I do that. But as I said, like you should never cross that 5x mark, because 5x is so beautiful. You're safe, you're good, you can do it. If you're smart, a little bit of smartness, it's enough. You can absolutely do it, but never ever go more than, you know, like 15, 20x, 50x, because, you know, like this is 1x is like a zero balls game. Absolutely nothing. 5x to 10x, smart people. 15x, little bit ballsy people. And let me say, like when this red warning comes, this beautiful red warning on Binance, I think it comes after 20. And now you're going to the small rect zone. And here is the big rect zone. And this is the absolute rect zone. Okay. So if you want to get wrecked, keep it completely here. If you want to make money, then keep it 5 or 10. Okay. Let me just show it at 5x. So now I confirm. So it's cross leverage and 5x. Every time when you are punching an order, just be watchful here, what you really have it here, because you will be in a hurry, like, oh, I have to buy it right now. And maybe there is isolated and you don't know about it. So you have to check it once just to know, like if it's isolated or cross margin, select 5x, click like this one, select your thing, finish. And now just come here. And there is like 2 types of order here. One is limit order, another one market order. Normally, I prefer to make market orders. I don't really make limit orders. It's very rare until and unless like really there is a reason for it. Because I know like, okay, I'm not looking like really for an intraday gain or something. It's okay. I just wait for my price to come. So I can just put like, you know, at this price, or let me say like, no, I'll buy it only at 257 because I'm so adamant about that price. And here saying like, what is the size of the trade? Whether you want to go like all in, completely 100% of the money at 5x, which means like it's 5 times of your position. Okay, it's 5 times of your position. And if you see here, like it's like almost like $500, and my money, like which is my margin, which is there, is just $100. So it's taking 5 times because it's getting multiplied here due to the leverage factor. So now if I take like 10% of my available money, and you can make this one on Binance, which is really, really, really very good. It's really amazing. You can put your take profit. For example, like, okay, I would like to, like 259. And what is the market price right now? 259.17. Okay, let me just keep it like this so that I make sure that I get the order. And take profit. Take profit like, okay, let me just put like 260 and stop loss. Oh, let me keep it like 200. Just for this one. And reduce only is an option like which is handy actually. Imagine like you're trading too much on the same pair or something like that. Then if you have 10 contracts right now, if you have clicked this reduce only, and when you are actually selling it or something, it will sell only those 10 contracts. Because in futures trading, you can sell more because it maybe the system is thinking like you are shorting it. You can have 10 BNB right now, and you feel that like, no, BNB is like very, very, very bearish now. Let me go double short, which means like you are 10 BNB long now. Double short means like 10 BNB, what you have, you are selling it back, 10 BNB, and another 10 BNB you are going short. So you can buy 10 BNB, and when you think like, no, market is going crazy, like now I need to short, so you can sell 20. What happens? 10 you had before, you sold that 10, and now you're going 10 more, which is short, like a new position. But if you take this reduce only option, in case of a mistake that you have bought only 10 and you are selling 11 now, it's not going to happen because you will be only selling those positions which is opened right now. So reduce only is for that. And GTC means like good till today. I will come to that part later on, and I will also share a document about this one. So now the cost is this much. I mean, like like they are also saying the margin required to execute this order. So that much of margin is required to make this particular trade possible. And here, this is like, I think like this is they are taking like brokerage or something like that. Oh, no. It's okay. I understand. It's the buy and it's the short. So now what we do, the prices are like this much. Okay, like now I place the TP, which is the take profit, and the stop loss, which is a 200. Okay, now long. So order submitted. You see, it's a submitted. It's there now. So we are long on BNB. Congratulations for everyone who's not trading on futures, but they have a chance to see the live trading now. So now the live trading is happening, right? So the size, you can see what is the size of the trade, and the entry price, exact entry price, where the orders were executed. That is what it means. And mark price, where actually in case of any market manipulations or something, they want to have a reference price of a contract. It's not the current market price, but it is the reference price. And that's what they call as like mark price. Liquidation price, I don't know, it's very strange. It's not showing anything. Actually, it should show some price to get liquidated. I don't know why it's not showing today. So here is a cross margin, and here is a P&L. So our P&L is slightly in green now. And if you want to close these positions, you can either type market and make the positions, like close it, or you can click even this one also, close all positions. And what is the difference is like, if you have several positions, you can close all the positions also. But individually, if you have to like close it, you can select here itself. I always suggest to, like go here and do it if you want to really close a position. And you can see like open orders here. What is this open order? The open order is, for example, like here you have BNB, which we have opened it. And it's saying like mark price, which is like less than 200, cut it into losses because that's our stop loss. And more than 260, which is our TP, take profit. So that will be, like executed here. So there is always two orders here, right? And orders history, when you come here, you can see like your orders, like what was executed, what price, what happened, everything. And trade history also, you can see your trade history, transactions, which means also like about commissions and other things, which gives you much more depth into your operations. So you can come here to see your P&L. So that's how it works. So there are some more terminologies here, like, and next time I will do more analysis on like a different kind of orders, because there are different kind of orders. So I will go one by one very slowly so that I will not confuse you a lot. So today's thing was like limit order. Limit means you are limiting a price. For example, you can set a buy at 258 only. Right now it's trading at 258.70. So you will not buy it. You will buy it only when it comes to 258. This is called as limit order. Market order means whatsoever is the price in the market right now, you will get it at that price. So whoever is selling at the best price, this is the best price as of now, and you can buy it at that price. So limit orders, market orders. And when limit order is good like when you're not in a hurry in a trade. And you know, like, okay, it can dip down, it will come there, no problem. And I'm not looking to scalp, not looking for day trading, just looking for positional trades, which means right now, like in my real accounts, I am long on BNB, and I will be long until next month when the burning is happening on 31st of April. I will keep my longs open until then. So for this one, like, you know, like in the morning when I open like new position also, I just placed a bid, buying bid. It's okay. It comes there and let me just take it for a long-term positional trade. But if I want to trade something like for today, intraday, very quickly, then I think I'm confident that it's going to pump today itself. Then there is no point in like placing a bid which might get filled or might not get filled also. It's very uncertain. So in this time, I would like to go for market order. So market order means like you will not see anything here. You see like limit, you see what is the price and what will be the size. In market order, you just see the size actually. It's like 10, 20, 30, 40, 50, or complete 100%. But you are not saying other things here. Why? Because that's how market order works. Because you're just buying from the market. Whatever the price is, you will get it from there. And you'll place your TP and you'll place your SL and go buy or long. If you are not sure about your orders, and if you just want to restrict your contracts, and if you don't have any kind of thoughts to like go short on something because of some bad news or something like that, always click this reduce only, so that like you are protecting yourself. So these are the most important things that you need to know, and this is good enough for you to start trading in futures. So there is one link I would like to share with you all, which gives you better understanding of what we were discussing here. Just a minute, I will give you that in the chat. Okay, so I've given you the chat, this link, and this link is very, very important because this is about the basic understanding of some of the terms that we used before in the futures trading. So this is official page of Binance, which explains everything very, very, very clearly. I know if you just go to this page and try to understand it, it will be a little bit difficult. But since you have seen it already in live action right now, and if you read it after that, then you will catch everything. So they have explaining like what is market order, what is limit order, what we discussed now, and what's the difference between market orders and limit orders. They give some examples also, like what it is all about. Yeah, and also like common types of orders, stop loss orders. This one I will keep it for next time. Stop limit orders also I will keep it for next time. one cancels the other orders, OC orders. This is what our bots places actually. This is quite simple. You might have seen on your Binance account already. What it is doing is, like, for example, let me, what we have placed here, it's kind of an OC order here, because there is like take profit and there is stop loss also. So imagine we will go to take profit first, then the stop loss gets cancelled. And if it hits the stop loss first, then that sell order, which was placed as 260, that gets cancelled. So that is why they call as one cancels the other, which means like either of the event should happen, either the stop loss or the target. And when one happens, another one automatically is cancelled. That is what OCO orders is all about. PNL is in green. That's good. What's time in force? So there are like other things, like what I said, like good till cancelled. This is one of the good features, like which is there in Binance. When you see, like when you're placing the limit order, as I said, like you're waiting for something to happen, right? You're just waiting for it. So when you're waiting for it, it means like you put like a bid for 255 now, and 255, it will not come today. And the question is like, you will wait till what time? And for the answer for that question is like good till cancelled. If you tick this GTC here, for example, if you select this GTC and if you go there, you see like it's good till cancelled. It's an instruction stipulating that a trade should be kept open until it's either executed or manually cancelled. So until you cancel yourself or until it gets executed, it will remain eternally open. And immediate or cancel. So this one order stipulates that any part of the order that isn't immediately filled must be cancelled. They're giving a very, very good example here. Suppose you submit an order to buy 10 Bitcoins at $10,000, but you can only get 5 BTC at that execution price. In that case, you would purchase those 5 BTC and the rest of the orders would be closed. I think it's pretty clear. Imagine you want to buy 2 Bitcoins. You put the order. One Bitcoin came, but another one didn't come actually. So immediately that gets cancelled. So that's what they call as like immediate or cancel. And fill or kill. Even this is another good option actually. Orders are either filled immediately or they're killed. If your order instructed the exchange to buy 10 BTC at $10,000, it wouldn't partially fill. If the entire order of 10 BTC isn't immediately available at the price, it will be cancelled. So in case of like low liquidity or something, it's going to help you. But you will never use this kind of features anyway, because we normally what we use is like market orders, because we are scalping or doing some kind of trading. But if we are going for, let me say, positional trades, still I myself like very rarely place the limit order until and unless like it's really necessary. I don't do that. I just go for like market orders. I just get my stuff, and then like I keep averaging it in case if it comes down, or if it's a profit, I will be happy. I'll sell my profits and I will get my money. That's how futures trading works. So there were okay. So if you have any questions about what we discussed today, you can ask. When Tesla? I think after Lambo. There is some fees in case you keep the position for a long time. No, there is no fees actually. If you keep the position for a long time, if it's you will pay fees like only when the order gets executed. Otherwise, there is no fees for that. Some some kind of exchanges before they used to like have this kind of thing because they didn't want you to keep the orders in the order book. Maybe it can manipulate someone thinking like, yes, there is real buyers, and they were canceling it. I think it was a group of humans who are doing it, or kind of robots, we don't know. But yeah, there was something like that. But in Binance, no, you don't pay anything for that. Or maybe it's useful to show them how to close the order on market. Okay, cool. It's pretty simple, actually, how to close the orders. So either you can go here, like market again, you put the sell order, like in case if you're not using this feature, what I said to you, like take profit or stop loss, if you're not ticking this one, then you just buy and you just sell. That's so simple. But since I selected this now, there is something open here. There is something open here. Like if you go to open orders, you see a lot of orders here, lot of completely. So what do? Go to here and close all position is there. Either you can, you see, like whenever you go here, there will be a pop-up which will be coming, and that gives explanation to you. You can close your entire positions here, which will enter orders of each current positions with the opposite size at market price at the same time. You can do this, or you can just like, like press market, you see, market sell order executed. And if you go here, there will be nothing. Absolutely, there will be nothing. So here, like position 0, open order 0. You are clear. And after every time you buy and sell, if you're a little bit new to the trading, please come here. Please come here and see if it's really closed or not. If the positions are closed and open orders are closed, yes, then it's completed. And you can come to like a history here. You will see here also like what price you bought it, what price you sold it. And was there reduce only option? For buying, no. For selling, yes, because you sold only what you bought. And everything is like expired because you canceled it. You manually took the action, right? So everything is canceled automatically. So here is the positions, and it's 0. And there are like other things also. I'm looking at the questions. What is the risk now? What is the risk now? You mean like in futures trading? Or I don't get the question. How much it costs for the interest? Can you give an example? Is there any swap? Well, like here you can see the funding rates. It's actually negative funding rates now. That's good. Like longs are not paying, I think. It's negative funding rates, and you can keep seeing this one changing. And next funding is coming in 55 minutes. So funding is like for every certain period of time, you need to pay this funding as a fees actually for your positions. This can be sometimes very, very, very high when there is too much of buildup of long positions or short positions. This can be crazy sometimes. So you have to watch even this also. Last time I could see like even like 0.8, and it was ridiculously very high taking the positions. But again, it depends on the contract to contract. In BTC, it's like 0.01. And next settlement is coming in like another 55 minutes. With cross, we can change leveraging real time. Could you say a few words about it? Yes, you can, but it's about like, adding more money into the position and changing it. But I don't really recommend to do such things at very early stage because it can lead to confusions, and also it will lead to addiction on another way. because you will keep pouring the money, and you will keep increasing the positions. That's not really advised. So when you begin something, like try to master over the little things first, because the small things leads to very big things. Don't forget it. And that's why I don't recommend to do all this complicated stuff right now. The best thing is like you take something, take with 5x leverage or 3x leverage, and try to play with this one first. And once you are sure about it, then we can go to other kind of things. But yes, like you can change, but you need to infuse capital for that. Isn't funding cool down a fee to keep the positions? Yes, you need to pay it. Yes, it's true. And this is one of the problems actually, because if you keep a position for a long time, really, and in between that, if these interests are very crazy, like very high, then yeah, you need to pay a lot of money. Let's check your open orders. Maybe you forget a lower order or something. Yes, absolutely. That can happen actually. And that's why I was telling so many times that you need to check the orders here, because we all have done these mistakes. We don't see it and we thought like, okay, I just booked a profit now and like, let me go. But you didn't observe that there was a kind of stop loss order or another buy order or something, and it got executed. And now like you are in huge loss. So you always have to see whether your orders are finished or not. It's like when you're coming back from the kitchen, you will check it twice or thrice if your burners are really burning, or like they got switched off, or if your gas is switched off or not. In the same way, you have to make sure here that all the positions are clear and clean, and you can go. Open interest is completely a different thing. What I was speaking yesterday, it was more about the options market. It's number of the contracts that is in the open, which means like if majority of them have bought an option with a strike call, it will be like too complicated to explain. Imagine like right now, Bitcoin is trading at 54,670. Now I will buy 58,000 strike call option of Bitcoin, which means like I'm anticipating the price to move to $58,000. So for that one, I will pay a premium right now. And when actually Bitcoin goes to 58,000, my premium will be like a couple of times or whatever it is. It will be, of course, up. So this is called as like open interest. And in futures also, how many contracts are right now open? That is called as open interest. And what happens is like if you don't sell this month's contract during the expiry, let me say today is 27th of March, and today the contract is expiring, and tomorrow's contract is different. And imagine like today's contract you will sell and you will buy the next month's contract. And that selling and buying, like how many people sold and how many people continue to have their positions for next month also, that is called as open interest. Like how many contracts are open? They affect the price, means you see like if majority of them buy the next month's contract also, then actually they're continuing buying activity, which shows like it's a bullish sign, right? It means like nobody is like pessimistic, like selling all the positions and going off. So it gives a kind of trend. And in market, many a times things work mathematically, because it's just a question of like demand and supply. But there are some things which is driven by psychology also, because every one of us, like including our own self, we were waiting what is going to happen yesterday, whether they are going to roll over the positions. This is what we use in stock markets normally, rolling over the positions. So whether they are rolling over, whether they're cutting their positions and like emptying their hands and like taking off their profits, we didn't know. So it's kind of like sometimes psychological also. But of course, it gives a good picture, like if people are actually renewing their contracts for the next month. If we have a stop loss very low and when the price is dropping, Binance automatically liquidates. Binance doesn't liquidate if you have enough margin, and nobody can liquidate you if you have enough margin. But imagine like if you kept your stop loss in case of Bitcoin like 35,000, until it comes here, like you will not get liquidated. Like now, let me say like, let me just make a quick trade once again. Now you see like it's cross leverage. 5x leverage, I confirm. So it's confirmed, it's here, clear, it's cross and 5x. So here what I'm doing, there is limit order option, of course, or there is market order option also. So I will come here a little bit. And here you are seeing, because the price of the Bitcoin is so high that it shows in this way. Otherwise, it used to be different before. So let me say like 10% of my portfolio, which is like for $10. And $10 is not really showing here because it's too small for the price of Bitcoin to be shown here. It's too small, really. So 10% of my portfolio, right? And let me not take this option this time because I just want to show you something different. Okay, so 10% of the thing, the cross leverage with 5x leverage. So now, buy now. Okay. Maybe there is some, maybe there is some minimum order limit or something. I don't know, because I never make for $10 kind of thing. Come on. I don't know, like, let me make it once again for, okay, 30%. Okay, like now definitely it will happen. So the cost they are showing is $21, 21 USDT. So, but you see, it got submitted because I think like there is a minimum order limit, like 10 or 15 USDT. I don't know. So here is the size, and you see like this is the entry price. This is the mark price. And you see, like there is liquidity price now. Before it didn't come for BNB. I don't know why. It's thanks to the Binance bug, which keeps happening. The bugs keep biting all the Binancers. But here we were lucky. 54,766 was the entry price, which means that's the price where we bought. And here is the mark price. Okay, it's the mark price. It's, as I said, like it's a reference point. In case of any market manipulation or something like that. It's not the current market price. It's not this, like what it's trading now. Okay. Yeah. And there is liquidation price, means until BTC comes to this point of 4,768, you are safe. Nothing gets liquidated. But if Bitcoin drops to this level, we are all liquidated, right? That's true. Like market is gone if it comes to 4,700, and I really hope it will not. But I'm just telling, like, in case if it comes to 4,768, yes, all the money you have, it's finished and you are completely liquidated. And that's called as wrecked point. This liquidation, another name for that is wrecked. And this is the reason why you should never trade for complete money that you have. Okay. And by the way, don't check for wrecked button on the platform. There is nothing like that. Just a joke. And margin amount. And you're seeing PNL now. You see, like even in the test accounts, like it's a profit is happening. And I'm so happy about it. So now we are making profits, which is 24 cents. And this much of ROE, which is return on equity, because it's 5x leverage. So the real profits is like you have to divide this percentage by 5 times. So that is like real money that you are making on this. So now how to sell? Just go to market, click it, finished. And you go here, order history, or before that, go to open orders. There is nothing. Nothing is open. Everything is closed. Order history. You bought at like 54,766, sold at 54,892. Filled, buy, sell, finished. Trade history. Oops, looks like another Binance bug. Trade history, BTC is not coming. I don't know why. Anyway, it's okay. So this is how it works. So that answers your liquidity question, I think. Would have been made from X orders from before. X order from before. Sorry, I'm not really getting it. When do you lose with futures trading? What would have happened to lose the 100 USDT in your wallet? Well, as I said now, for example, when I bought the BTC now, just to show you guys, and I was showing the liquidation price at 4,700 USDT, right? If BTC would have come to 4,700 USDT, yes, I would have lost all my $100, because since I'm trading with cross leverage, it will trade until my last one USDT, until that point. So that's what we call as like the maximum risk. You can show them the calculator tool to calculate their P&L before they place an order. It simulates the margin needed and the P&L. Yeah. My Zoom screen is like going everywhere on the top. Just a minute, please. Okay, so the question is about showing you the calculator, right? So here is a calculator. So you can just kind of like get an idea. Like, for example, if you're trading at 5x, right? Let me say like you are entering Bitcoin here. And when I'm moving the cursor, can you see guys here? Like, can you just make a thing? Because for me, like this complete portion is full of this Zoom, like everyone's name coming there. So I don't know, like if you can see that. So I'm moving my cursor on the price right now, 55,000, right? Okay, cool. $55,000. So let me say like my entry price is like $55,000 and exit price, like it's like 56,500, and the quantity of Bitcoin, like, let me say like 1 Bitcoin. With this, let me calculate. You see, like my P&L would be 1,500 USDT, and initial margin would be 11,000 USDT needed. And ROE, return on equity, will be 13%. So that's how it works here. So there are like liquidation price also, like you can check it. So entry price again, like 55,000, and quantity is like 1 Bitcoin. And you see, like I have 100 USDT here. So let me take like the quantity a little bit less, because for that money it's too huge. 0, 1, 10, 100,000, 10,000. Okay. Calculate. Oh, it's too low, I think. Insufficient wallet balance insufficient. Yeah, it's too low. That's what I'm saying. It's very, very low. Imagine like you have 10,000. I'm not having so much of balance, so it's not coming up. Anyway, you can simulate it here, like with your margin, how much you have in your account, and what quantity you would like to trade in terms of Bitcoin, and the entry price here. And you will be really able to see your liquidation price, like what is. But anyway, once you get into a position, it will be shown here to you. So you will be clear about it. So max price and open price, everything you can see it here on the calculator thing. And the calculator is just found here. It's the same thing even on BitMax. You can just see it just a place like where you're placing the order. And here also it's the same. Binance would need to rename liquidation price column to rect price. Yeah. Need to go. Thanks. We'll see you later. Thanks. Okay. Leave now. Okay, everyone. Like then, I think it's pretty clear what we discussed today, and we will keep making, as I said, and we will have like different topics as we go ahead, because this is one part of trading, but there are like a lot of things that I would like to show, like flash loans, making flash loans and trading on that one. And like in DeFi trading, like it's very complicated, but it's very amazing. You can actually trade just by having the assets that you have without the need for actually getting new USDT. Imagine like you have already Bitcoins, right? You take the Bitcoins, put it on a DeFi platform, lend that money, and borrow USDT on top of it. Use that USDT, make profit, and come back on this platform to get back your assets, and remaining will be your profit. It's a bit complicated to understand, but I will make it very simple in some other sessions that we will be making in the future. So this is one good way to begin with futures trading. And always you need to understand that futures trading, if you do it properly, you will have a great future. Otherwise, there is no future at all, because futures trading is so dangerous. At the same time, it's highly rewarding. So it's always about discipline. Maintain the discipline, as I explained to you, and try to split up the trades. Try to go small first, understand the things, understand the features and the functionalities on the platform. That's what you need to do first. And then once you become experienced, you can go all in afterwards. It's the sky is the limit then. Okay, then it was amazing meeting you all on Saturday. As Norbert says, it's a Saturday crypto show of Guru. It was amazing meeting you all and talking to you here. Next week, we will come back with a different subject. Until then, we will go back to Telegram and speak there, and I will try to do my research and try to find some big balls trading. Okay, cool. Then have a great weekend and have a great Saturday. See you on Telegram very soon. Bye. Bye-bye.
Bye.
Thanks.
Thanks.
Bye.
See you guys. Bye-bye.
Bye. Bye.
Bye.
Bye-bye.